This channel is all about finding money making opportunities, whether that is in crypto, stocks, games, or affiliates. Although I have primarily focused on cryptocurrencies, but this one is about a company's stocks. Over the years, we have come to an understanding the relation between stocks and crypto. While stock is riskier and volatile, it offers opportunities of huge gains with less probability. On the other hand, we have stocks that are less riskier and less volatile, but the potential gains are less compared to crypto. But what if we were to find an undervalued stock caused by a value discrepancy? The secret sauce to maximize your probability of generating profits by going long on mispriced equities. And that is an opportunity that just arose. While I was reading an article about the assassination attempt on Cointelegraph, I stumbled upon the statement from the founder of Reflexivity Research, who I've seen in news channels before. His name is Anthony Pompliano, commonly known as Pomp. Now, I went deeper into learning more about him and found his recent statement regarding the Sohn conference. After every such conference, these popular personalities are asked about their top picks from companies that were presented in the conference. His choice was DeFi technologies. And this is what he said on his pop letter. Regardless of how you cut the numbers, I still believe that DeFi technologies is undervalued. Given this additional information in the latest earnings report, I believe DeFi Technologies has a good chance of being one of the best performance from any stock that was pitched at Sohn conference in April. Now, this led me to investigate DeFi Technologies further, and here are my findings. This is a diversified technology company primarily focused on the digital assets or decentralized finance ecosystem. The company manages digital asset exchange traded products or EDPs through their wholly owned subsidiary called Valour Asset Management. Now, just a quick FYI, ETFs are a subset of EDPs which are approved by the SEC in the US. Now, they also offer node management of decentralized protocols through DeFi infrastructure. And they also take positions in decentralized or Web3 companies with DeFi ventures. Now, moreover, they also provide crypto native research via the recently acquired Reflexivity Research. So, basically, Reflexivity Research was recently acquired by DeFi Technologies, and it is now among their wholly owned subsidiaries. Now, another one of their wholly owned subsidiaries includes Valour, as we mentioned, which is an asset manager, just like BlackRock, but it has headquarters in Canada. Now, this is where they are getting their edge. They have reported strong AUM, asset under management growth, and net income in the previous and current quarter. Now, the reason being that BlackRock and other such firms are having difficulty getting their ETFs approved by the SEC. We had spot Bitcoin ETF approved this year, and now we have Ethereum ETF with talks of Solana ETF on the way. But Valour is already offering Sol EDP, Ethereum EDP, Ton EDP, XRP EDP, and so many more. Solana EDP is their largest EDP. Also, Valour has just launched the world's first EDP for the Near Protocol token on the Spotlight stock market in Sweden. Now, the Near Protocol supports decentralized applications in the DeFi and NFT sectors with high scalability, low transaction fees, and interoperability. It has a market capitalization of approximately $5.6 billion, and it ranks among the top 20 digital assets globally. Now, just like this, Valour has launched 11 EDPs in this year and have plans on introducing more digital asset EDPs in the upcoming months. Now, this expansion of product is one of the biggest reasons why DeFi Technologies is reporting glowing numbers in their quarterly earnings report. Now, Valour's AUM has grown 800% from December 2022. And according to Anthony Pompliano, Valour's average fee generation on their AUM is approximately 7.2%, which is very, very huge. Another reason behind this increase in AUM because there are very few licensed cryptocurrency ETPs for Wall Street to invest in, and BlackRock and other such firms in the US, they're dragging their feet trying to get the ETF approved by the SEC. Now, this is giving the competitive edge to Valour, which is going to be long-lasting advantage. Now, take a look at some of these headlines about their quarterly performance. DeFi Technologies' new business line, DeFi Alpha, a specialized arbitrage trading desk, generates an additional 59.2 million Canadian dollars, which is 43.4 million US dollars, from low risk arbitrage trades totaling over 113.8 million Canadian dollars, which is 83.4 million dollars in USD. Thus far in quarter two, and this news on Yahoo Finance, DeFi Technologies Incorporation announces quarter one 2024 financial results, achieving its strongest financial quarter to date. Operating revenues up to a record 13.4 million Canadian dollars, operating net income of 5.3 million Canadian dollars, and notable strategic developments. Now, their AUM grew by 78.7% to approximately 908 million Canadian dollars, which is driven by favorable market conditions, new product launches, and strategic corporate actions that enhance trading volumes and overall financial performance. And according to DeFi Technologies projections, the annualized operating revenues they may reach approximately 119 million Canadian dollars, which is approximately 87.45 million US dollars for 2024. Now, this will be done in support of ongoing AUM growth, upcoming ETP launches, and the integration of new acquisitions, which are poised to capitalize on the favorable conditions in the digital asset sector. Now, these numbers, of course, can get overwhelming. So let's just put them all together, and then we'll take some words from Analyst on what their projection is for DeFi technology. So here are the bullet points. DeFi Technologies recorded its strongest quarter ever, achieving operating revenues of 13.4 million Canadian dollars, which is 9.7 million US dollars, and operating net income of 5.3 million Canadian dollars, which is 3.85 million US dollars for quarter one 2024. Then we have Valour's asset under management or AUM have grown more than 800% from December 2022. It grew 50% from quarter one to quarter two. Now, given that it increased 50%, then the profit from the quarter is around 15 million US dollars. Valour grown revenue 78% in the past year. They generated $94 million in profit off their trading desk. So their profit run rate in the first 6 months of this year is 55 million US dollars. And this $55 million will be trading at 20 times profit, resulting in $1 billion in AUM. Now, 2024 project net income is around $86 million. That is in USD. DeFi Technologies reports its trading desk, DeFi Alpha, has generated an additional 19.3 million Canadian dollars, which is 14.1 million US dollars in arbitrage trading. Now, according to an analyst, Michael Kim, who used discounted cash flow model, projected the price of DEFTF, their stock, to $3, which was almost 6 times higher than the price at the moment, which was $0.55. Now the price is 0.96 US dollars, so the price has already doubled. And do note that this report came before the company released their earnings report, which was a couple of weeks ago. Now, another analyst projected the price to be 1.64 US dollars, basing it on a formula of 15x earnings. Now, this price quote is 50% higher from today's price, but it still doesn't justify the actual price of the share because just like the last analyst projection, this one was also done before the company released their earnings report. But the thing to note here is that they still projected the price to grow 3x to 6x even before saying the glowing numbers in the earnings report. So if they revise their projections, it will be much more than their previous projection. That is what we are sure of. And DeFi Technologies knows this. They know that their stock is undervalued at the moment. They are getting reached out by brokers, marketers, because they all see the gap there is. And one thing that everyone knows is that it won't stay long. It never does. And this is why DeFi Technologies have announced a buyback program to buy back the common shares of DeFi Technology. Now, take a look at this news. DeFi Technologies to buy back up to 26.99 million shares. This is what they're saying. The company is undertaking the NCIB because its management believes that currently and from time to time, the market price of its common shares may not reflect the underlying value of the company's business and prospects. Management believes that at such times, the purchase of common shares for cancellation would be the best interest of the company's shareholders and an appropriate use of its cash on hand. The company's current cash balance is approximately 69.9 million Canadian dollars, which is 51 million US dollars. Now, this is probably the first $300 million company that is doing this, but they know what's happening and they know what's coming next. Even when crypto was down, the spot Bitcoin ETF across 11 ETFs reported inflows of $300 million. A couple days ago, Hong Kong's Bitcoin ETF had their largest inflows in one day ever, and Australia's Bitcoin ETF is now open. These figures clearly show that the world is turning to crypto. CNBC just featured DeFi as a name worth watching, and DeFi Technologies is making an effort. So, if anyone wants to take this opportunity, that would be right now or it will be never. They haven't even done any marketing yet. Just think about what will happen when they start marketing. According to DeFi Technologies forecast for 2024, the annualized operating revenues, they are projected to reach approximately 119 million Canadian dollars, which is 87.45 million US dollars due to the ongoing AUM growth and upcoming ETP launches. Notably, they have already surpassed these projections with $10 million in quarter one revenues and $94 million in trading revenues thus far in 2024. However, for the sake of this discussion, let's adhere to the $87 million operating revenue projection for 2024. DeFi Technologies is informing Wall Street that this number will double on an annualized basis compared to its quarter. Consequently, the price targets and projections previously discussed for 2025 should now be updated to 2024. Now, this guidance implies that DeFi Technologies is aiming for $75 million in net income, which is equating to 0.22 US dollars per share. At 15 times earnings, which is much lower than what the S&P 500 is trading at, this translates to a 1.1 billion US dollar market cap. That's 5x from the current size of the company. They already just broke a 52-week high. So all this concludes that this company is currently undervalued and their stock price is undervalued, which makes it a wonderful opportunity. The only thing that needs to be addressed here is our mindset and approach. Because when we're given an opportunity to buy a token or a stock at an undervalued price, we start questioning, why is it undervalued? This is the confusion that leads to low confidence and eventually we miss out on the opportunity. The current price movement of the stock, projections by analysts and upcoming ETP launches, and also the acquisitions and the quarterly earning reports, they all suggest that the current price is far lower than what it will be in the next few months. In the long run, it may even reach $7 or $10 mark, seeing how the market is currently performing. So even though I'm not providing any financial advice, my plan is to go long on this. I'll share all the details and the links in the description. So you can check those out from there. And if you have any question, feel free to ask me in the comments. And I'll see you in the next video. So stay tuned.